Welcome to the first lecture in the finance series. In the first lecture, we'll talk about the New York Stock Exchange. What do you think a market is? Please pause the lecture video and try to write down a definition for a market. Markets sound more complex than they are. Many of us start learning about markets from a very early age. As kids, many of us set up lemonade stands or some other business. We had a product we wanted to sell and we went to look for buyers. We needed information to set our price, so we looked at what the kids on the next block were charging. What kind of demand did we see? We would learn all of this about our market, which is simply a place where goods are offered and sold. A stock market isn't that different. It's about finding a place where the most buyers and sellers are located. It's about supply and demand. Only in the world of stock markets, things happen faster and on a much larger scale than at a lemonade stand. What do you think are the two main stock trade markets in the US? Please pause the video and try to answer yourself. The correct answer is the New York Stock Exchange and the NASDAQ. The Standard & Poor's 500, often abbreviated as the S&P 500 or just the S&P, is an American stock market index based on the market capitalizations of 500 large companies having common stock listed on the New York Stock Exchange or the NASDAQ. The Dow Jones Industrial Average, also called DJIA, the Industrial Average, the Dow Jones Industrial, the Dow 30, or simply the Dow, is also a stock market index. We will learn more about the Dow later in this lecture. The New York Stock Exchange and the NASDAQ, which stands for National Association of Securities Dealers Automated Quotations, are the two main stock trade markets in the US. When companies go public, they can seek to list on these exchanges. What other major stock exchange markets can you think of that exist worldwide? This is a list of the 20 largest stock exchanges as measured by the market capitalization of issued shares of domestic companies. You can see that the New York Stock Exchange is very large. The NASDAQ and the London Stock Exchange are similar in terms of the market cap, followed by three Asian stock exchanges: Japan, Shanghai, and Hong Kong. Let's talk a little bit more about the New York Stock Exchange, since it is so huge. What do you know about the New York Stock Exchange? Please pause the video and try to answer yourself. Since when do you think the New York Stock Exchange exists? Please pause the video and try to answer yourself. The correct answer is 1792. So the New York Stock Exchange is well over 200 years old. On May 17, 1792, 24 brokers signed the Buttonwood Agreement, which set a floor commission rate charged to clients and bound the signers to give preference to the other signers in securities sales. The earliest securities traded were mostly governmental securities, such as war bonds from the Revolutionary War and First Bank of the United States stock. Bank of New York stock was a non-governmental security traded in the early days. The location should not be a surprise, as Wall Street was a popular place for the trade of furs, tobacco, spices, molasses, and gunpowder as well. The New York Stock Exchange is not the oldest stock market in the world. Where do you think stock markets might have emerged even earlier? Please pause the video and try to answer yourself. The Amsterdam Stock Exchange is considered the oldest in the world. It was established in 1602 by the Dutch East India Company, or the Verenigde Oost-Indische Compagnie, for dealings in its printed stocks and bonds. There is quite a big gap between the oldest and second oldest stock market, which is the London Stock Exchange. The first US stock market was the Philadelphia Stock Exchange, just 2 years ahead of the New York Stock Exchange. Who do you think operates the New York Stock Exchange? Please pause the video and try to answer yourself. The New York Stock Exchange is owned by Intercontinental Exchange, an American holding company that is listed on the New York Stock Exchange. Previously, the New York Stock Exchange was part of New York Stock Exchange Euronext, which was formed by the New York Stock Exchange's 2007 merger with the fully electronic stock exchange Euronext. New York Stock Exchange and Euronext now operate as divisions of Intercontinental Exchange. Intercontinental Exchange, or ICE, is a holding company. Do you know what a holding company is? It is a company that owns other companies' outstanding stock. The term usually refers to a company that does not produce goods or services itself. Rather, its purpose is to own shares of other companies to form a corporate group. Please pause the video and try to answer the next few questions yourself when they are posed. Where do you think the New York Stock Exchange is located? The New York Stock Exchange is located on the corner of Wall Street and Broad Street in Lower Manhattan. What is a commonly used nickname for the New York Stock Exchange? The New York Stock Exchange is frequently referred to as the Big Board. Who did we say operates the New York Stock Exchange? A holding company called Intercontinental Exchange. How much money exchanged hands on an average day in 2015 on the New York Stock Exchange? The average daily trading value of the New York Stock Exchange Group in 2015 was approximately $44 billion. On an average day in 2015, about 1.2 billion shares were traded in 4.75 million transactions. Please pause the video and try to answer the next question yourself. The New York Stock Exchange is the world's largest stock exchange by market capitalization of its listed companies at almost $20 trillion as of May 2015. As a matter of fact, it is by far the largest because the Nasdaq, which is the world's second largest stock exchange, has a market cap of about $7 trillion, making it less than half of the size of the New York Stock Exchange. Please pause the video and try to answer the next question yourself. This is true. The bombing was never solved, although investigators and historians believe the Wall Street bombing was carried out by Galleanists, which were Italian anarchists, a group responsible for a series of bombings the previous year. The attack was related to post-war social unrest, labor struggles, and anti-capitalist agitation in the United States. How many days do you think the New York Stock Exchange closed in the aftermath of 9/11 and Hurricane Sandy? The correct answer is 4 trading days after 9/11 and 2 days after Sandy. How expensive do you think the highest priced shares on the New York Stock Exchange, Berkshire Hathaway's A-class shares, were in August of 2014? In the summer of 2014, the price of $200,000 for one share was hit the first time. Berkshire Hathaway is an American multinational conglomerate holding company which wholly owns Geico, Dairy Queen, Fruit of the Loom, among others, and which owns 26% of Kraft Heinz Company and an undisclosed percentage of Mars, and has significant minority holdings in American Express, the Coca-Cola Company, Wells Fargo, IBM, and Restaurant Brands International. The company is known for its control and leadership by Warren Buffett. Berkshire Hathaway is the 5th largest public company in the world. You can pause the lecture and look up how much a Berkshire Hathaway Class A share costs today. Do you think that until 2005 the right to directly trade shares on the New York Stock Exchange was conferred upon the owners of 13,660 seats? The right to directly trade shares on the New York Stock Exchange was indeed conferred upon the owners of seats, but there were only 1,366 such seats available. Seat holders were also referred to as members of the New York Stock Exchange. Seat prices have varied widely over the years. What do you think is the most anyone ever paid for a seat? In 1929, the most expensive seat in history was sold for over $6 million in today's dollars. When in history do you think the first woman became a member of the New York Stock Exchange? This was in 1967, which is only about 50 years ago. Here is a picture of the first female member of the New York Stock Exchange, Muriel Seabird. In which year do you think the first black person became a member of the New York Stock Exchange? This was in 1970, 3 years after the first female became a member of the New York Stock Exchange. Here is a picture of Joseph Louis SEARLES III, the first black New York Stock Exchange member. In 2005, the New York Stock Exchange entered into an agreement with Archipelago to become a for-profit publicly traded company. Former seat owners received $500,000 in cash and 77,000 shares of the newly formed company per seat. This translated in a value of about $5.8 million. Since there were no seat holders anymore after the merger, how do you think firms could trade on the New York Stock Exchange since then? The New York Stock Exchange now sells one-year licenses to trade directly on the exchange. Licenses for floor trading are available for $40,000, and a license for bond trading is available for as little as $1,000 as of 2010. Neither are resellable, but may be transferable during the change of ownership of a corporation holding a trading license. In order to understand stock markets, one should comprehend the difference between a dealer and a broker. What do you think the difference between a dealer and a broker is? It might help to compare a car dealer with a real estate broker. The New York Stock Exchange has brokers and designated market makers, formerly called specialists. Designated market makers are similar to dealers. They establish quotes whereby the bid price is set slightly lower than listed prices, and the ask price is set slightly higher. A second-hand car dealer similarly tries to buy or bid for cars slightly below the market rate and tries to sell or ask for cars at a price slightly higher than the market rate. Market makers are intermediaries who are always ready to buy and sell because they have inventory on hand. This way they create liquidity and efficiency in the market. How do you think designated market makers make their money? The correct answer is A, from the spread, the difference between the bid price and the ask price. Market makers are required by law to give customers the best bid and ask price. The price is set based on the equilibrium price at which demand and supply are very close. Once the market maker has entered a price, she is obligated to either buy or sell at least 1,000 securities at that advertised price. Let's say a market maker has entered a sell order for Microsoft and the bid ask is 65.25 and 65.30, meaning the market maker bids $65.25 to buy Microsoft shares and she asks $65.30 to sell shares. The market maker receives an order for 1,000 shares and sells those shares at $65.30. She then enters a bid at $65.26. By doing so, she has created a new market because that bid price is now the best bid. We can also say she made a market, which is where the term market maker comes from. If she buys 1,000 shares at $65.26, she has successfully made the spread because she has made a profit of 4 cents per share on a volume of 1,000 shares. Why would a market maker not just increase the spread and make more money per trade? The goal of the market maker is to generate maximum transaction flow. Higher volumes of trade means more money, so the spread should be narrow. A broker is entirely different. They are intermediaries who have a license to buy and sell securities on a client's behalf. Individuals need a broker because we are not allowed to walk into the New York Stock Exchange and trade stocks. How do you think brokers make money? The correct answer is C, from commissions. Just like real estate brokers, they get a percentage of the transaction. Let's look at some other facts about the New York Stock Exchange. Do you think that the official hours of the New York Stock Exchange are 9 to 4? This is false, because the New York Stock Exchange does not open until 9:30. What kind of fees do companies that are listed on the New York Stock Exchange have to pay? Listing fees are billed for each security listed at the time an issuer first lists on the exchange. Listing fees are also billed each subsequent time a new class of security is listed, or at any subsequent time that additional shares of a listed security are issued. Listing fees are based on the number of shares issued and outstanding, and are calculated separately for each class of security listed. Annual fees are calculated for each class or series of security listed based on the number of shares issued and outstanding. To be listed on the New York Stock Exchange, companies have to pay an initial listing fee and an annual listing fee. This ends our lecture on the New York Stock Exchange.